You are watching Market Watch, the brief overview of the key events from the world of finance. U.S. stock markets started the week on a high note, with the S&P 500 and Nasdaq reaching new records, supported by strong quarterly earnings, a weaker dollar, and falling Treasury yields. The technology and communications sectors stood out. Despite lingering uncertainty over global trade and President Trump's public attacks on Fed Chair Jerome Powell, investors continue to show strong appetite for risk assets. President Trump's outspoken criticism of Federal Reserve policy has reignited the debate over central bank independence. While many regulators enjoy a high degree of legal autonomy, they are often influenced by executive power in practice. In this regard, the U.S. presents a paradox. The Fed's formal independence is relatively limited, yet operationally, it retains considerable autonomy. Still, the growing politicization of central bank leadership appointments, in the U.S. and beyond, is raising concern among investors and economists globally. While U.S. markets rallied, European exchanges ended Monday with mixed results. The Stoxx 600 closed lower despite gains in some individual stocks. As trade talks with the U.S. remain uncertain, the EU is preparing countermeasures in case a deal isn't reached by the August 1st deadline. At the same time, the euro's sharp rise since the start of the year is putting additional pressure on export-driven companies. Investors are closely watching upcoming earnings to assess the impact of currency movements and trade uncertainty on corporate profitability. The oil market opened the week in decline, with Brent and WTI prices falling amid concerns about weakening global demand. Escalating trade tensions between the U.S. and the EU, along with potential new sanctions on Russian crude, are prompting investors to revise their economic outlooks. Supply concerns have eased for now thanks to increased output and a ceasefire between Iran and Israel. A weaker dollar offers some support for oil prices, but that may not be enough to offset the broader geopolitical risks. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.